The economy lost 33,000 jobs. Obviously, we were expecting a weak report, but this is even weaker than we expected. Thoughts from the panel? Joey.
Yeah, I have to say the headline number is going to be that negative number, but it sounds like there's really some positive news in this report. The two big things that jump out at me, certainly wages. We had been hovering around 2.5%. That shot up to 2.9%, closer to 3%, which is what we were looking for. In addition to that, labor participation jumped up to 63.1%, which is really a good sign that people may be more optimistic and want to participate in the workforce. So, again, the headline number, not so good, but it was expected with the hurricanes. But there is some good news in this report.
John Hilsenrath, jump in here. Your thoughts?
A couple of things. I think the market's going to look past that decline in the headline payroll number because the Labor Department said in its release that there was a big impact in, as you reported, restaurant employment. I think the unemployment number down to 4.2% is this, and the wages up to 2.9% is a sign that slack is diminishing in the economy, and that means check the box. The Fed's raising interest rates again in December.
In terms of this report, you had the labor participation rate actually went up slightly. U6, 8.3%, lowest in more than a decade.
Not bad.
June 2007.
U6, all right.
And then we always look at the revisions, and it was kind of a mixed bag. A revision to the upside in August, a downside revision in the month of July, a net loss there of 38,000 jobs. But overall, again, the headline number being ignored by futures. If you look at how the Dow futures are doing right now.
Exactly.
They're exactly where they were before the report came out.
Down 18 points.
Exactly where they were.
And I think this headline number really emphasizes that the next 2 months are going to be very important in terms of understanding what the trends are here. We're going to have to look at what the bounce back is like in October, November to really see, is the trend this year going down? Is it holding steady? I don't think it's going to matter so much for the Fed, but it's going to matter in terms of where we see the economy, how strong it is going into the new year.
Charles?
Hey, can I throw out one other idea for people to consider today? This number comes right as the president is about to make his decision about who's going to be leading the Fed for the next 4 years. He's got a decision coming in the next couple weeks. One of the things he's got to be asking himself this morning is, do I want to get rid of a leader in Janet Yellen who's got the unemployment rate down to 4.2%? The economy's doing pretty well in this environment. Do you want to change horses when the economy's going, at the lowest unemployment rates we've seen in a couple of decades?
Let's not forget about the anticipation of taxes and the rollback of regulations in terms of attributing part of this recovery, Charles Payne, because that's part of this. The businesses are loosening up the purse strings again.
They are loosening up the purse strings. But, I think we get back to the fundamental reason why America is the greatest economic country in the world. And when the wheels of commerce start moving, when I start to make investments and I hire people, it creates a chain reaction. That chain reaction has already begun. Of course, I think smaller businesses, more than anything else, need and want that. Yesterday, the National Federation of Independent Businesses were out there really pounding the table. We need it more than anybody else because these pass-through rates are extraordinarily high. But having said that, I don't care about the Fed raising rates if it's because the economy is doing better. If it's because the U6 number dropped dramatically. If it's because more people are entering the workforce. If it's because we're hiring more manufacturers and we're building factories. Please go ahead, raise it 25 basis points.
And what is 25 basis points?
You'll actually maintain some credibility.
But that's the danger, is that the unwinding of the Fed balance sheet. I don't care if the smartest person walking on planet Earth says they know how this is going to play out in the financial markets. They simply don't, number one. And everybody was expecting, by the way, longer-term interest rates are quite a bit lower than they were at the start of the year. We were at almost 2.45% on the 10-year yield. Now we're yesterday at 2.35%. So again, longer-term interest rates have consistently gone against what investors have been expecting. You see those numbers start going up significantly. That's a headwind for the stock market, too.
I just want to point out that this is the first decline in jobs since September 2010. So, it's not, we're all discounting it, Hurricane Irma, Hurricane Harvey, but this is the first time the economy has actually lost jobs in several years. September 2010, Kevin Kelly, weigh in here with your reaction.
Yeah, but one of the issues that you have to compare it is that if you look at leisure and hospitality, it lost over 111,000 jobs. If you add those jobs back into this report, where are we at? We're at that 80,000 number. So that's where you're getting the dispersion of numbers that we're talking about. And think about what happened. This number is actually better than Katrina's number. Katrina's number, we actually had a negative 35,000 print. This one, we have a negative 33,000, and that was with 2 storms. So looking through this number, you just have to think about what's going to drive this market forward. We're talking about the Fed raising rates in December because the economy's healthy. And think about this. When was the last time we had tax reform, right? That's going to move the needle even further. What could this jobs number look like should we get actual tax policies that trickle through to the real economy? I mean, could we have a 4% jobless rate number? I mean, that would be phenomenal. Wow. And that would actually lead to inflation going higher because wages need to rise as well.
Yeah, look, if you own a hardware store on Main Street, or you own a restaurant, you're a small business, you're going from a 39.6% rate to a 25% rate. That is big stuff. That is big money for small and mid-cap businesses.
As long as
for job creators.
As long as Republicans hold the line on that. It gets back to this question of how much is that going to erode.
On the corporate rate, the president said the red line is 20%.
Well, Republicans in Congress better also believe the red line is 20% because they all have to work together to get that done.
Yeah, all those lawmakers who for decades have talked about we need to help small businesses, and they don't know jack all about small business, and have continuously for decades given a very nasty hand gesture to all those small business owners, the real job creators and entrepreneurs in this country.
Well, now's the time. Step it up, Congress.